Good morning. This is Andrew from Trend Following Mentor and Abraham Trading Consultants. It is the 18th of March, and before we start, just quick disclosure. What I'm going to be discussing is my own personal opinions. They're not directed for any one specific advice or anything, and you can read the full disclosure on the website. What Abraham Trading Consultants do is we help you try to become a better trader, and this is the whole point of these videos, is to teach you how to look at the market, stock market in particular, to become a better investor slash trader. What I always do is I always look at the S&Ps, I look at the QQQs to get a bearing of where we're at. And yesterday it was very interesting. It was very news related. We had a nice pop up and people were very excited, and they thought that, whatever the weakness of last week has been worked out and it's proverbial buy the dip. And the real reality is that we erased half of last week's losses. But before you jump up and down and get excited and start throwing more money at the market, one thing you really need to always examine is the volume. And yesterday volume was very light compared to the volume that was going into the selling. You had back here a tremendous amount of selling, which really is the footprints of hedge funds, large hedge funds, institutions, mutual funds. So really, when you have an up day, or what we thought we had an up day, is that you want to see a lot of volume. And unfortunately, we didn't really have that. Then you have to put some other things into perspective that, there's, I guess this could even be a positive with Goldman, that you have a David Kosin who's came out and he basically asked, when does the party end? And the thing that, I can answer that is that I read an article that the corporate insiders, these are the main people within companies, they're net sellers. And they're the biggest net sellers going back to 1990. So that's showing a tremendous lack of conviction on their part, that they are selling more shares than they're buying. They think that their shares are possibly overvalued and they're liquidating. That's not what you want to see. These people have a greater knowledge of truly what's happening within their companies, and you want to see conviction on their part buying shares, not selling shares. So really, what is all this about? When you invest, you need to have a trading plan. You need to know what exactly to buy, and you want to buy the strongest stocks and the strongest sectors when the market is healthy. And currently, in my own personal portfolio, I'm 50% invested. I liquidated half of my portfolio. The rationale has been the number of distribution days that have been in the Nasdaq, which is a very high number, as well as in the S&Ps. We've fallen significantly from the highs. There's certain percentages that I look at. We were almost below certain moving averages. None of that was favorable. And again, the market can heal itself. Again, I'm not a bull, I'm not a bear. I just listen to whatever the market is telling me and following an exact group of rules. And if you really want to be a successful investor slash trader, that's what you need to do. You need to follow rules. You need to know what to buy. And again, you want to buy the strongest stocks and the strongest sectors when the market is healthy. You want to know how much to buy, which you need to figure out your own comfort level of how much to risk in your portfolio. And then you need to have rules to know when to exit. And that's kind of what we do. I mean, first of all, I manage money professionally. Actually, I do it for commodities. But what I also do, which I love doing, is teaching and educating other traders. And it's not just, let's say, small traders. It's institutional traders. It's because I'm surprised at the number of people that really don't get it. That, again, you can just look at all the people that were buying Enron on the way down or WorldCom on the way down. I mean, you have to have a plan, and what you want to do is almost the opposite of what is the common knowledge or the Kramer approach. This is what I do. I am able to touch base with people all over the world. I talk to people from Australia to Argentina, throughout Europe, and I learn from them when I'm teaching them. So it's really a cool thing, educating, and this is what I do, and I can help you to become a better trader. Again, I'm not like something theoretical. I'm in the markets every single day. I've been in the market since 1994. Again, I've seen bull markets, I've seen bear markets, I've seen peak oil, I've seen peak gold and market crashes, all of it. And this is what makes me a trader. Thank you. If I can help you in any way, here's my website and you can contact me up here. Thank you.